Hey guys, it is Julie here with JT Wealth. In today's video, we are discussing Tesla and the insane volatility we expect surrounding their inclusion to the S&P 500. So let's get into it. All right, guys, welcome back and thank you so much for being here. Like I said, we are chatting about Tesla today, as on Monday, they will officially be added to the S&P 500. Now today, on Friday, is when we expect a lot of trading and rebalancing in preparation for this. So we are going to take a look at both the positive and negative implications of all of this. And just before we get into all of that, this is just your friendly reminder that if you enjoy today's video, make sure you give us a big thumbs up and leave your thoughts in the comments down below. Also, if you enjoy free stocks, make sure to check out some of the links we have down below in the description. Right now and until the end of the month, Webull is giving away 4 free stocks just for signing up and funding a new investment account, so make sure to check them out. All right, now it is still early in the day and we've already seen a lot of movement in Tesla's chart. Currently trading at $667, we've seen a range just today from $651 all the way up to $684, and we're sure to see a lot more movement as the day progresses. Now, with Tesla being added to the S&P 500, there are a lot of index tracking funds that are going to need to do some rebalancing to reflect this. And in order to emulate Tesla's approximate 1.58% weighting, indexers including Fidelity and Vanguard will need to shift nearly $85 billion into Tesla shares on Friday, in addition to conducting a rebalancing of a little more than $20 billion. The rebalancing will dwarf the previous record of $50.8 billion set back in September of 2018. Hearing from Howard Silverblatt, the senior index analyst at the S&P Dow Jones Indices, he says it is going to be an enormous trading day. Aside from producing record-breaking volumes, this rebalancing will have other implications. As Silverblatt says, in order to buy something for $85 billion, you need to sell something for $85 billion. So he expects big action right at the end of Friday because Tesla's closing price will be used to calculate the weighting the company will have in the index on Monday. So everyone wants to get in right at the close, which will make a lot of commotion. Keep in mind that Tesla is by far the most traded stock by value on Wall Street, with $18 billion worth of its shares exchanged on average in each session over the past 12 months, easily beating Apple in second place with an average daily trade of $14 billion. So it'll be interesting to see how much volume we get to today. Now, with these companies having to free up $85 billion for Tesla, the other 504 members of the indexes are expected to face downward pressure. Tesla's inclusion will also lower the index's dividend yield to 1.54% from 1.57%, while causing the 2021 forward price-to-earnings ratio for 2021 to increase to 22.3 times from a little under 22 times. As for Tesla itself, the stock should remain well bid into the rebalance, although the majority of the gains have likely already occurred, according to a team led by Morgan Stanley strategist Boris Lerner. So quite simply, they're going to need to sell a lot of other companies in order to make room for Tesla. Now, for big companies like Apple, this is not going to have a huge implication on their stock price. But for some of, say, these smaller companies with a little less volume, this could cause some volatility. And we have seen Tesla's stock price rise almost 65% since the announcement on November 16th that they were being included in the S&P 500. Taking a look at Tesla's impact on the S&P 500, a recent note from Goldman Sachs helps put into perspective what exactly would have happened to the S&P 500 this year had Tesla been a constituent. That 657% that Tesla had gained would have lifted the index's return from 16% to 18%. Whether this is a lot or a little depends on who's interpreting those numbers, but they underscore the kind of single stock gain required to move the index a few percentage points. One important thing to note is that only 81% of Tesla's market cap is going to be included in the index. This is because the S&P 500 is created on free float market cap, basically what shares are actually available to the public. And about 20% of Tesla's shares are held by Elon Musk and other insiders. Dan Ives, who is an analyst at Wedbush Securities, says that being added to the index is a clear validation of the company's profitability trajectory looking ahead. Clearly, this is a key positive for shares and ultimately removes another question mark around the Tesla story going forward. So with all of that being said, what could go wrong here with Tesla's inclusion into the S&P 500? Now, the first point here is one that we did touch on previously shortly after Tesla was announced to be joining the S&P 500, and that is that historically, many stocks will fall after their inclusion to the S&P 500 has been completed. And this was highlighted by a study done by Rob Arnott and his associates, who found that stocks do indeed rise going into the S&P and fall when coming out. Now, in a 2018 study of stocks that had gone into and out of the S&P 500 from 1987 to 2017, Arnott found that the average mega cap stock outperformed the S&P 500 by 127% in the 12 months prior to the close of the rebalancing day. Meaning that before stocks are included into the S&P 500, they've had a pretty amazing year. Obviously, we've seen this with the case in Tesla. Not surprisingly, the pattern reverses after the addition and deletion. The added stocks then tend to underperform, and the deleted stocks tend to outperform. So Arnott found that the average entry rises an additional 1% relative to the market on the day after joining the index, then loses about 2% relative to the market over the following year. The average deletion drops 1% more than the day after its removal, then beats the market by an average of 20% over the next year. So what does this all mean? The S&P 500 is designed to buy high and sell low. So this basically highlights a major problem when it comes to passive index investing, as by the time stocks like Tesla are included into this index, you're buying it at a fairly high price since it's already had a tremendous run up this year. Arnott concluded that the weight of history is working against a similar massive rise in Tesla stock in 2021. Given all the classical signs of a bubble in Tesla stock and the evidence of 31 years of S&P additions and deletions, December 21st to 22nd likely marks the beginning of a reversal in Tesla's share price. So as we mentioned in our previous video, this is historically what happens after the inclusion. But as we also mentioned, Tesla is not your typical company, and their stock has certainly not played by any of the traditional rules. So it will be very interesting to see what happens next week with their stock. Now, a couple other points to note is what else is occurring during this rebalancing of Tesla for the inclusion. And that is what is known as a quadruple witching, which is the quarterly expiration of index futures and options and individual stock futures and options. So two unprecedented phenomena will be converging, said Steve Sosnick, who is the chief options strategist at Interactive Brokers. The index has never added such an immensely large stock at the same time that options volumes and open interest are at record highs. Sosnick is concerned that the combination of the Tesla addition, the quadruple witching, and the rebalancing in the rest of the S&P 500 could result in very high imbalances in demand for stock that could cause price dislocations. There is potential for massive market on-close imbalances because this is the biggest stock entry ever. There is an awful lot of money that will be sloshing around at that time. Because this is such an event, we could be in for a much more volatile market on close than people are used to, particularly with so many retail traders involved in stock options that could swing in or out of the money. So as we stated earlier in this video, most of this trading volume is expected for the end of the day. So just expect to end the week here in a somewhat volatile market. And one other thing to be wary of is that others are concerned that the sheer volume of trading could cause glitches, especially since most of it will be concentrated in the few minutes towards the close of day. So if you are planning a trade for the day, maybe plan it a little bit earlier in the day just to ensure that it does actually get filled. So here we have it, the moment that everyone has been waiting for, the official inclusion of Tesla to the S&P 500. Now we are expecting insane volume and volatility towards the end of the day. For those of us already invested in Tesla, many are very happy holding Tesla for the long term. So riding out this near-term volatility will not be a big issue. Now we will see if Tesla tends to follow the historic trends and if next week we do see a big dip in their price. If so, could maybe be a good buying opportunity. Of course, I always love hearing from you guys, so let me know your thoughts in the comments down below. Do you already hold Tesla? Are you looking at getting in? And what kind of volatility do you think we're going to see? Make sure to leave your thoughts down below in the comments. Of course, these videos are never a suggestion to buy or sell any specific stock and are only meant for information and entertainment purposes. Any trade should always be made based on your own research and due diligence. If you made it all the way to the end of today's video, make sure you give us a big thumbs up and that you're subscribed to the channel as well. Thank you guys so much for watching. I hope you have a fantastic day, and cheers.